The world is holding its breath. Every time tensions flare in the Middle East, shockwaves ripple through global finance. But in the 24/7 world of crypto, the story is getting more complicated. Welcome to the generational wealth community, your pathway from knowledge to legacy. We don't chase hype, we decode the market. Recent conflicts have sent Bitcoin on a roller coaster. And today, we're breaking down what these volatile clashes mean for your digital assets, and whether crypto is finally becoming the safe haven it was meant to be. The Middle East has been a geopolitical powder keg for years, but recent direct confrontations have put the crypto market to the test. Take the events of 2024. In April of that year, after Iran launched a drone and missile strike against Israel, markets got rattled. Then, on October 1st, 2024, when Iran again launched hundreds of missiles at Israel, we saw another sharp reaction from investors. These weren't minor skirmishes. They were direct military actions that put all global markets on high alert. But none have reacted with the same head-spinning speed and volatility as crypto. The first move in crypto during these events was classic panic selling, following the April 2024 strikes. For instance, Bitcoin plunged by 7%, dropping to a low of around $60,900. Similarly, on October 1st, 2024, Bitcoin's price plummeted to $60,000. This was a textbook flight to safety, where investors dump what they see as their riskiest assets first. While crypto sold off, traditional safe havens like gold climbed. The initial verdict seemed clear, in a moment of true geopolitical fear. Crypto still acts more like a high-risk tech stock than digital gold. This knee-jerk reaction follows a historical pattern. When Russia invaded Ukraine in February 2022, Bitcoin also saw a sharp, immediate drop of more than 9%, hitting a low of $34,000. In the first phase of a crisis, fear drives the market, and speculative assets get hit hard. However, what happened after those initial drops is where the story gets interesting. In April 2024, after its plunge, Bitcoin showed a surprisingly strong rebound, recovering even as the conflict was unresolved. This resilience suggests a possible shift in the market structure. It didn't just collapse, it found a floor and bounced back. So what explains this newfound resilience? A huge piece of the puzzle is the arrival of spot Bitcoin ETFs in early 2024. For the first time during a major geopolitical scare, large-scale institutional investors had a regulated and easy way to buy Bitcoin, and it looks like they did. Even as retail investors were panic selling. Data from periods of tension in 2024 showed that institutional demand through ETFs remained strong, with some periods seeing consecutive days of massive net inflows. This suggests that big money players aren't panicking. They're seeing these dips as buying opportunities. This structural demand, which simply wasn't there in past crises, is absorbing sell-offs and creating a price floor that tempers volatility. This leaves us at a critical crossroads with two potential paths. The bearish scenario is pretty straightforward. If a future conflict escalates dramatically, impacts major oil routes, or draws in more world powers, we should expect another major risk-off move. In that case, Bitcoin could break below recent support levels and test lower ranges. Altcoins would likely suffer even more. However, the bullish case is becoming more compelling. If future conflicts remain contained or de-escalate quickly, the market could rebound sharply. With institutional buyers showing they have an appetite for buying the dip, a short squeeze could ignite a rally. Some analysts are even making the long-term case that prolonged conflict could push governments toward more spending and money printing, which historically benefits scarce assets like Bitcoin. The recurring Iran and Israel tensions have been a real-time stress test for the entire crypto market. It's confirmed that in moments of initial shock, Bitcoin still sells off like a risk asset, but a new story is unfolding. The steady hand of institutional investors, buying the dip through regulated ETFs, is revealing a maturity the asset has never had before. The market is no longer driven solely by retail fear. It's now balanced by long-term institutional conviction. The immediate future is still uncertain and will be tied to geopolitical headlines. But one thing is clear. Bitcoin's role in the global financial system is evolving right before our very eyes. Subscribe for daily recaps. Drop a comment on your biggest takeaway and turn on notifications. We do a crypto news video every morning and a deep dive every afternoon. Let us know in the comments any subjects you'd like us to cover. Quick disclaimer, I'm not a licensed financial advisor. This is for educational purposes only and not financial or investment advice. Crypto is volatile. Never invest more than you can afford to lose. Do your own research.